It's Friday and you're watching FreightWaves Now. Thank you so much for tuning in. I'm your host Anthony Smith, and coming up we're going to have Andrew Cox giving us an update for the DHL Supply Chain Pricing Power Index. But first, we're going to go to the fabulous Donny Gilbert with the carrier update brought to you by PowerFleet. Stay tuned.
Thank you, everybody, for tuning in to the Carrier Update sponsored by PowerFleet. My name is Donny Gilbert. Before we jump into the markets here, I've got a few concerns I want to talk about. We have some weather moving in this weekend. I'm going to invite Nick Austin in here to talk about some weather. There's some slick roads in the Northeast, cold weather in the Midwest, and what's going to happen in the Pacific Northwest. Nick, thank you for coming on today, sir.
Thanks for having me, Donny.
All right. What's happening here?
Well, the good thing is the radar is actually really quiet for today. There's not a whole lot of heavy snow anywhere, but the last couple of days, parts of the Great Lakes, the Northeast have gotten hit by snow. It's gone, but now it's really cold.
Explain this map. I've never really seen this map out here before.
This is our sonar freeze ticker in map form, and where you see the deep, really deep and dark blues, that indicates where average daily temperatures are going to be very, very cold. In this case, not just sub-freezing, but sub-zero.
Right, so we see a lot of cold weather coming down, and of course down here in Florida, these are the warmer temperatures in green.
The warmer colors are the warmer temperatures, yep.
So right here about Kentucky-Illinois state line, we're moving into the sub-freezing zeros?
That's right, around the Ohio Valley northward, so that's where a lot of roads will stay slick, even though it's not snowing in those areas anymore. The cold temperatures are going to just kind of keep those roads frozen, and especially a lot of the secondary routes, and some interstate sections.
We had some of them move across the Northeast yesterday. Is there still any issues across the Northeast right now? Is it still snowing?
There's still some lake effect snow, but that's fading out today. But again, roads are going to stay really slick, especially near the Canadian border, a lot of the interior parts of the Northeast. Luckily, not the major cities.
All right, well, that's good to hear.
Right.
So, across here in the middle, I-70, I-80, moving across the Midwest, we got a lot of cold weather.
Protect from freeze will be very important.
Well, today's Friday, in which I'm going to talk about some long haul loads coming up this Friday, because right now is the primary time that if you're a carrier, you want to get your driver somehow, so you're wanting to book these long haul loads. So moving across from the East Coast to the West Coast, you might have these loads and you may not realize where it's nice and warm here in Maryland and it's nice and warm here on the West Coast, but crossing through this area right here, your load could freeze if you're hauling any types of soup, beverages, whatnot, and you may not realize it. So this is a good thing for carriers to know if you're moving across I-70, I-80, maybe I-90 moving across, that in the interior part of the U.S. here is some sub-freezing zero temperatures that could possibly freeze your loads. So keep an eye on that. You might want to switch your freight over to a reefer.
And it will be cold all weekend, so
all weekend long, and especially at night.
It's important that you're talking about it, especially at night.
And that's when a lot of drivers shut down, the load's not moving, so the liquids aren't really vibrating as much to keep them from freezing, and that's when you really lose these loads, and they cause a lot of claims issues, millions of dollars every year in claims issues from Protect from Freeze loads. Let's move out to the West Coast. What's going on the West Coast?
Well, the Pacific Northwest, they've gotten kind of a break from the heavy snow and any major storms over the past week, but starting tonight, through the early part of Monday, which is President's Day, so all weekend long, off and on, heavy snow coming back to the Cascades of Washington and Northern Oregon. So we're talking about 1 to 2 feet of snow possible.
1 to 2 more feet of snow.
And that'll affect parts of Interstate 90 and some other U.S. routes going over mountain passes.
So if you're looking for long haul loads for this weekend, you might want to double check going up into the Washington, Oregon areas.
That's right. I would, yeah.
You're allowed to get stuck in the snow for a while.
It's possible.
All right, so or take your chains, because you're definitely going to need some snow chains going to that area as well.
That's right.
If you like it. Well, Nick, I appreciate your update, sir.
You're welcome.
There we have it. If you're looking for some long haul loads, be careful crossing the Midwest. Be careful going in the Pacific Northwest. Those are some dangerous areas. You definitely want to check up on that. Now let's dive into some of what's going on in our markets today. Outbound tender volumes have moved up. We see the last couple of days they've moved up. It was just below 95.50, and we've crossed over to 96.34. So here we have some gains in volumes. We want to see this continue. We would like to see about 400 more points there on our outbound tender volumes to get us above the 10,000 mark. Drive and tender rejection rates, we're holding out still right around 5%. This has been relatively flat for the last several days, but I would rather see a flat market than a market that's declining right now, because these tender rejection rates are so low. I want to see them, of course, turn back up, but right now we're holding at 5%. Reefer tender rejection rates, they bumped up here a little bit. They moved up to 13.55%. Here in the last couple of days, we see them move up there a little bit. That's a good sign, and a lot of this could be because some of the colder weather that has moved into different markets, and that was going to increase the demand for reefer equipment. Moving on to our national map here, I brought us our long haul outbound tender rejection map, and this is the same thing as our OTR maps that you normally see, except I've broke this down into long haul loads only. I want to see where the highest tender rejection rates are and the lowest tender rejection rates are for long haul loads only. And of course we see here Arkansas, Missouri, some up here in Iowa, Kansas and Denver. These are some markets that are hot a lot for your long haul loads. You're going to fetch your best rate per miles out of these markets. The southeast here, you see a lot of lighter shades and some white shades, which means that the southeast has a lot of capacity right now. So the long haul loads, they're running at regular contracted rates. The rates aren't elevated, so we're not seeing anything that's really jumping out here. Up in New York here, you see some a little bit darker shades of blue. Of course, again, I told you, if you're crossing the country, be careful in the areas here in the Midwest. The West Coast here, of course, California, very light shades. Long haul loads out of California are very popular, a lot of capacity, therefore your rates, once again, are going to be either contracted or a little bit lower out of these markets. Jumping over here to the map, what are some of the hotter markets that we have right now? Little Rock, Arkansas, tender rejection rates for long haul loads, 21.36%. Denver, Colorado, 18.42%. Twin Falls, 12.39%. And of course, maybe we'll say Joplin, Missouri, 21.69%. So these are some good markets. If you have trucks that are near these markets and you can move over to these markets, you might want to check and see if you can move over and book you a load out of these markets today. Now, finally, I want to bring you a different type of map. I showed you the long haul outbound tender rejection rate map. This is the long haul inbound tender rejection rate map. Inbound tender rejection rates measure a carrier's willingness to run loads to a specific market. So as tender rejection rate, or as inbound tender rejection rates are rising, that means a carrier may go to that market, but they're actually going to want probably a little bit more money. So they're rejecting loads at contracted rates, and they're probably getting rebooked on the spot market at higher markets. Of course, in this map to jump out first, you see Florida, a darker blue Florida. So destinations that are in the darker blues are the destinations that long haul truck drivers are really probably not wanting to go to unless they're getting a higher rate. So you can check this with your destinations and see. We have some loads up, of course, here in the Northeast that are difficult to run to. You see some shades of blue there. Atlanta, Georgia is on this map as a dark blue. So long haul drivers are kind of resisting going to Atlanta, Georgia, unless they're getting a higher rate. Florida is always a tough market. Everybody knows if you get a load to Florida, you're going to charge some extra money. Dallas, Fort Worth, and Houston also light up on this market. We've seen outbound tender rejection rates in the 2 and 3% from the Dallas and Fort Worth area. So that's a particular market to pay attention to. Denver, Salt Lake, and even the Los Angeles, Ontario market. So here, if you're running to these markets, Pacific Northwest, Seattle, and Oregon, which you might want to avoid these weekends. If you find loads that are going to these destinations, you might want to bump your rates up because these are the markets that are going to allow this as you're bidding these. Now, finally, I want to mention one thing. If you're watching our show and you see a map here or a dashboard that you would like to have, go to your Sonar and click on your chat board and let us know. We can send you a link, and you can click on that link of a dashboard that you want, and it'll pull it up in your Sonar and save it to your My Pages. So if you see something that you like, just let us know. Click on the chat, say, hey, I was watching the carrier update today. Can you please send me that dashboard? And we'll send it right to you. All names are anonymous, so we will not see your name or your company's name. Thank you.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
here with Andrew Cox. Andrew, what do you have for us today?
Hello, sir. I've got the DHL Supply Chain Pricing Power Index. Just a quick refresher. 0 would be all the powers to the shipper, 100 all the power to the carrier, 50 would be a balanced market here. This is kind of our synthesis of a lot of FreightWaves data sets that kind of gives us a little bit of insight into who's got the pricing power between the shippers and the carriers. Right now, we are at 25. We're the same point as we was last week. We haven't moved much because the data's been kind of muted. It was a mundane week. I've struggled to find topics to write about because the volumes are almost exactly where they were last week and exactly where they were this time 2019. Rejection rates have tumbled since the Christmas high of like 14, 15, now down to around 5. This is below the 2019 average. Capacity is really loose around the entire country, as Donny just mentioned. And then rates have absolutely fallen since Christmas. They're now down below $1.40 a mile, which is nearing that operating costs of a truck, so it can't really go much lower. That's the good sign.
Right.
Yeah.
So when I chat with you and I chat with Kevin about this index, a lot of that expectation was to have this kind of movement kind of slow in the first part of the year. What's the 3-month outlook looking like?
Yeah, you're right. It's very typical for capacity to be loose and volumes to be muted in the first couple months, especially January, February. That's the typical slow season of the freight industry. But we do expect things to loosen up, or tighten up, moving forward. And our 3-month outlook actually has it all the way at 45, nearly a balanced market. We're expecting when produce season comes into fruition and we have a little bit of a peak season there in the summer, I guess 3 months would be the end of April, we're expecting things to tighten up quite a bit and give some power to the carriers.
Got you. And there's a lot that goes into this. One of the things you mentioned, you watch different indexes. What are some of the components that you've seen lately for this?
Oh, sure. Well, we start out with rates, tender rejections, with load volumes. We look at a lot of economic data. This week, we didn't have all that much to deal with. We had inflation come up. The CPI came out this past week or Friday, and it ticked up a little bit. It was below expectations, but at right around 2.5% for the year, which is near the Fed's target. So we don't, and we looked at the Fed funds rate. They said they're not expecting to do anything, move up or down. There's actually, when you look at the futures market, there's a 40% chance that they actually cut rates in the next year. Even though inflation's kind of picking up, you would think that rates may increase, but it doesn't look like the Fed's going to do anything for the next few months. So our economic data is a little bit, again, the whole thing was just muted. There wasn't much going on this week.
Right. And I think even some of the releases I just saw from even today, I think industrial production just came out. Not a lot of change from the previous month, so it's looking like a slow and steady start to the year.
Yeah, it's okay. Things aren't bad, but things aren't great.
Yeah.
As long as we can just keep it moving, keep the consumer happy, I think we're be in for a decent year.
Exactly. I think the consumer retail sales were also a little bit flat, but still, like you said, positive, not bad, not amazing, but still growth nonetheless.
Right. As long as we can kind of get over this coronavirus hurdle that's kind of looming, I think we're in for a good year.
Yeah, I think that's going to be one of the huge. I think that's been the story of the year so far. I know we're only in February, but really the coronavirus has really been a huge talking point because it has had ripple effects all over the industry. Transportation really kind of seeing a lot of the impact here, and so it's really kind of uncertainty, a lot of uncertainty around how long that impact is really going to stick around.
Yeah, certainly, and it's going to have to take time to see when it gets here. We've already got a dozen cases in the U.S., but no major outbreak. Nobody's died. Everybody's recovering. But the people around China, the Chinese economies that they trade the most with, Australia and Japan, they're going to be the ones that are most impacted, even though that we are heavily involved with China. But they're going to be impacted first, and it will ripple to us. But we're hoping that we'll be able to withstand and find other partners in other places.
Excellent, Andrew. Thank you so much,
right,
and thank you for tuning in. That's going to do it for this week's edition of the DHL Supply Chain Pricing Power Index. Be sure to tune in next week for our update. That's going to do it for this Friday edition of FreightWaves Now. Thank you so much for tuning in. The fun doesn't stop here. We're always streaming around the clock on all your favorite streaming platforms. Check us out on Apple TV. And for all my fellow Android users, we have you covered as well. We'll see you on the next episode.
Is the trade war back on?
Trade war.
Trade war, full-blown trade war.
15% tariffs on $112 billion worth of goods.
Hours earlier, China announced tariffs of 5% and 10% on U.S. products.